All right, welcome to the Explainer. Today, we've got something pretty special. A look inside a professional financial brief on Alphabet, Google's parent company. We're going to break down how the pros really see one of the biggest companies on the planet and what they think is next. So let's get right into it.
Okay, so right off the bat, the brief kicks off with a super important disclaimer, and we're going to do the same. Just to be crystal clear, this is not financial advice. Think of this as us getting a peek behind the curtain, a chance to see how the analysts actually crunch the numbers and build a story around a company like Alphabet. It's all for learning, to understand the why behind the big headlines.
So, what's the big picture here? What's the main story this analysis is telling us about Alphabet? Well, the first thing it does is frame the company as this huge opportunity, and it's way more than just Google search.
And the brief lays it out really clearly, breaking Alphabet down into what it calls three main pillars. First, you've got the dominant advertising engine. That's the established cash cow, right? The thing that just prints money. Then you've got the challenger, the high growth engine, Google Cloud. And finally, the big one, artificial intelligence. The analysis basically says AI is the key to everything going forward. These three things together, that's the whole ballgame.
All right, time to get into the numbers. Let's look at the company's recent report card. How have they actually been doing?
So let's start with an anchor point. The brief puts the stock price right around $196 a share. Think of this number as the market's vote. It's the current price tag on the whole company. Everything else we're about to look at helps explain how we got to this number. And wow, look at the recent momentum. A jump of almost 19% in just 3 months. That is huge. It tells you that investors were feeling really good about where the company was headed right before this brief was written.
So what's behind that confidence? Well, just look at the revenue. We're talking over $96 billion in 1 quarter, and they beat what the analysts were expecting. Numbers that big, it just shows you the incredible power of that advertising machine. It's the financial foundation for everything else they do. But here's where it gets really interesting. You look at where that growth is coming from. Yeah, search grew by a really healthy 12%, but Google Cloud, it exploded by 32%. That's the whole diversification plan paying off right in front of our eyes. That second pillar isn't just a side project anymore. It's becoming a real powerhouse. Okay, we're about to get a little more technical now, but stick with me, because this is where we really get to see how healthy the business is. We're going to decode a few of the key financial terms that the brief uses. First up is something called the P/E ratio. Honestly, the easiest way to think about it is like a price tag. It just tells you how expensive the stock is compared to how much profit it's making. Are you paying a super high premium for it, or is the price more down to earth? So the brief pegs Alphabet's P/E somewhere between 19 and 21. Now, what does that mean? For a tech giant that's as profitable as Alphabet, that's considered pretty moderate. It's not exactly a bargain bin price, but it's also not flying into the stratosphere like some other tech stocks out there.
Next up, ROE, which stands for Return on Equity. I love this one. Think of it as a grade, a report card for how well the company's management is doing its job. It basically asks, how good are you at taking the money we invested and actually generating profits with it? And yep, higher is definitely better here.
And Alphabet gets an A+. Almost 35%, that is an incredibly strong number. It shows that management is just fantastic at turning $1 of shareholder money into more profit. And that efficiency is exactly why they can afford to make these gigantic, ambitious bets, like spending billions on AI.
Last one in this section, I promise. EPS growth. That's earnings per share growth. This one, it cuts right to the chase. All it tells you is whether the company's profit is going up. Simple as that. Are we making more money per share than we were before? And the answer is a big yes. A 26% growth in earnings per share in just 1 year. That's a powerful number. So think about it. Not only is the company already insanely profitable, but its ability to grow that profit has been speeding up. That's a huge deal.
Okay, so we've seen the report card, and it's looking pretty good, right? Strong performance, great grades on efficiency. So where does the brief see things going from here? Let's look at the road ahead, the forecasts, but also the risks.
So here's what the analysts are thinking in terms of future price. The brief lays out a few targets, and you can see this generally upward trend they're forecasting over the next year. They're looking at maybe 220 to 250 in about 12 months. Now, of course, and this is important, These are just educated guesses. They're forecasts, not promises.
And this slide, this really gets to the heart of the whole story. It's like a tug-of-war. On one side, you have these huge forces pushing the company forward. I mean, an $85 billion investment plan for AI and data centers, that's a catalyst. But on the other side of the rope, you have some serious risks. And here's the irony. The brief points out that AI, the thing they're betting on, could actually be the thing that disrupts their main business, search. Plus, you always have that dark cloud of regulatory battles looming.
Okay, let's pull it all together now. Time for the final brief, the bottom line summary of this whole analysis.
And boom, here it is. All the key numbers we just talked about, all in one place. You've got that strong recent run-up in price, the moderate PE ratio, that amazing ROE and EPS growth showing how profitable they are, and that optimistic but, still cautious forecast for the next year. It's the whole story at a glance.
So after all that, what's the final takeaway from this professional brief? The verdict is, Alphabet is a rock-solid tech leader. No question. The analysts see some decent potential for growth, but they make it super clear that the real story, the big, huge bet, is all about AI. That's what's supposed to drive the future. And really, that leads us to the one big, lingering question that this entire analysis leaves us with. We've seen the strengths, we've seen the growth, we've seen the absolutely massive bet on AI. But we've also seen the risks. The risk that AI could turn on its creator, so to speak, and the ever-present regulatory heat. So here it is. Is Alphabet's incredible innovation engine powerful enough to outrun its own risks? That's the billion-dollar question, and we're all going to be watching to see how it plays out.